On this Wednesday, our next guest says the latest round on the financial bailout may be sowing the seeds of the next crisis. He's Viral Acharya. He's professor of finance at NYU Stern School of Business. Good morning.
Good morning.
So first, let's take a step back. Geithner's speech yesterday, investors thought a lot was missing. How about you?
I think a lot of detail is missing, but I would also focus on some of the positive aspects of the plan. I think it's very clear that they're going to look at some sort of stress testing of the bank balance sheets. Think about separating out the bad assets from the healthier parts of the balance sheet.
So some element of a bad bank here.
Some element of a bad bank here for sure. But I think what is new compared to what was expected was that there is going to be a public-private partnership. They're going to try and shore in some sort of private funds for this.
You think that's going to work? That people are going to go out? They haven't been buying these assets as of late. You think this is going to make a difference?
I think it will make a difference. There is some activity for sure. I know that many private investors, hedge funds, those private equity funds who can invest in these kinds of assets, they are buying pools of CDOs out there. Of course, private capital, in order to help a systemic crisis, will never be of the quantity that a government can supply. So the idea here is to use whatever private capital is out there to get some price discovery going in order to ensure that at least on a relative basis, different securities are being bought at the right price.
Bill, let me ask you, because, I mentioned before the break, you've got this huge research report, Restoring Financial Stability. It's huge. It's over an inch or 2 inches thick here.
It's over 33 faculty members working on it.
Okay, and there's a bunch of sections in it. What more would you have liked to have heard, though, from Geithner? You know investors were disappointed that there weren't more specifics. What else did he need to do, you think, in your view?
To me, the most important thing seems to be that there had to be a clear time frame in order to achieve this outcome. If we go back to the Great Depression...
Is that unrealistic, though, in this environment, to have some kind of time frame, or no?
I don't think so.
Okay.
I think it's possible to set a time frame. If you go back to the Great Depression, that time we had fewer banks, smaller banks. There were 2 days when it was a bank holiday. The bank supervisors went in, they looked at what is good, what is not. They closed the bad banks and they said, okay, the healthier banks can start. We have a much more complex environment right now. But we've already lost a lot of time in the crisis. There are still many zombie insolvent banks sitting out there. And unless and until investors know that these banks are zombies and these banks are healthy, we are not going to get private capital back into the banking sector.
Would you then support that they actually shut down the banks for a couple of days, give everybody a chance to really go over these books and say this is good, this isn't good, and make some smart decisions to get the system back on track?
Probably not a couple of days, and I think they probably can't shut down the system in the meanwhile. But I would say probably give themselves a quarter, maximum of 3 months, where bank supervisors will basically go and essentially decide whether a bank is insolvent or not. When a bank is insolvent, it'll be forced to sell its assets to the bad bank or be nationalized.
Now, Geithner wasn't very clear about whether banks saddled with toxic debt may be forced to fail. What do you think? Is it very likely that we're going to see some banks fail?
I think we will most likely see some banks fail. It will happen either in the form of their equity being completely diluted by government taking it over, which would effectively be a nationalization of the bank, or it will happen by them being put into the FDIC administration, where they are commercial banks.
Is it smaller banks, or is it possible some of those big banks are still at risk, in your view?
Yeah, I think the big banks ought to be nationalized, in my opinion, if they are insolvent, yes.
All right, but, history has kind of got a mixed bag about the success of that. If you look back in terms of what's been done in terms of nationalization, sometimes it works, sometimes it doesn't. You think it would work this time around?
Yeah, in the most severe crisis, such as the one in Scandinavia, for example, in early 90s, this is what was done with the largest banks. It was extremely successful.
All right. I want to ask you about this one chapter, Chapter 15 in your research book, the financial sector bailout, sowing the seeds of the next crisis. So what are you concerned about? Are you worried that we're laying the groundwork with the moves that are currently being taken for another crisis at this point?
A lot of this was an analysis of the earlier TARP plan, and I think one of the points there that we were most critical of was the loan guarantee scheme, which is still in place, mind you, where banks can basically go out and issue debt at 75 basis points guarantee fee to the government, flat fee, it's to the FDIC, regardless of what risk, leverage, assets the bank has. And this just seems a bad design, because I think what it does is that when you're willing to give debt so cheap, it basically allows banks to continue on their bad assets, keep making riskier investments, and so on.
Doesn't fix anything. So bottom line, I got 30 seconds here left with you. Are we setting the groundwork for another crisis in your view?
I think whatever we've seen being announced yesterday seems to be a much better plan than the original TAR plan. A lot of detail remains, but hopefully this will come forth in the next week.
But you're
or
not
two.
ruling out another crisis?
No, not yet.
What crisis would it be, again, in the financial sector?
I think it would just be a continued steady deterioration of the economy.
All right. All right, on that, we're going to leave it. Viral, thank you so much for your time. Appreciate it. Viral Acharya of NYU's Stern School of Business.